Hi, everyone. Thank you for joining us on a great Saturday morning. It's a pleasure to be hosting you today. Before we start, I just wanted to quickly give you an intro. I'm Nishant Ranjan. I'm one of the founding partners of Favcy. So, Favcy is the organization you must have noticed in whatever communication that you've gotten here via, whether it's email or through all the partners that have been helping us promote the event itself. The idea is very simple. Just wanted to give you a quick intro before I start. Favcy is basically a venture building platform. We work with idea stage entrepreneurs, seed stage entrepreneurs to help co-build the technology, the product, digital product of the platform, and we fund that entirely as well. Um, Beyond that, what we do is we keep on working towards a lot of different areas with the entrepreneurs to help them succeed. Whether it's go to market, branding, so on and so forth, is something where we come towards from a strategic point of view and advice. So it's one of those early companies where we work along with early entrepreneurs, early founders, and we help them scale. Now, today we have a very interesting guest. We have Mr. Arjun Rao who will be joining in. Uh, so, Arjun, over to you.
Thanks, Nishchay. Hi, everyone. Good morning to everyone, and great to be here on this platform. Thanks, Favcy, for having me. I'm Arjun Rao. I'll start off with a quick background about myself and where I come from, doing what I do today. I'm currently founding partner at Speciale Invest. We're a $20 million fund focused on early stage deep tech ideas, right? Doing seed investments, right? My own personal journey and background spans the last 17 to 18 years in this ecosystem. Started off as a software developer at one of the early internet darlings of this ecosystem called Yahoo, right? Spent 4.5, 5 years working there, building products at scale, right? Which basically gave me an appreciation of building products and building internet products, right? And also led to a fascination of how businesses, products, and technologies are built at scale. From there, I went on to business school to learn a little more about products, markets, and business side of things in this ecosystem. Then moved into product management at a company called Ibibo, which is now called Go Ibibo, part of the Make My Trip group, right? One of India's largest travel operators. Did product management there for a couple of years, learned the ropes of product management, taking a new product to market, right? Trying to get customers, users, and scaling it, right? Also was a small setup when I joined, which gave me a startup feel, right? And maybe set me up for future experiences as well. Along that journey, I got the confidence to, go solo and become an entrepreneur myself, and started in 2009 a web education company building SaaS products for schools, right? First foray as an entrepreneur wasn't very successful, but learned the hard way about the industry, about sales, about bootstrapping, about building product, so on and so forth. Great experience, not very successful as a business, shut it down within a year and a half or so. And then started my second venture in the travel space called travelyari.com, right, in 2010, right? That was a journey that I was on for about 6 years, bootstrapped or started the company from scratch, raised capital, scaled up to 150 people, 200 crores in sales, B2C business, right, all across India, right, and had amazing journey building that and growing that. Towards the latter half of that, we also faced some tough times, which also taught me a lot, right? Funding dried up after having raised series of seed and series A, right? Series B was tough. Competition became tougher. Some competition got acquired, right? All sorts of things. We had to retrench people along the journey. So great learnings, building product, technology, right? And then doing operations, strategy, finance, fundraise, everything that is required to do as a founder, right? So amazing journey of about 6 years running that company along with a couple of co-founders, right? And moved out of that journey in 2015 and 16 early, and had done a few angel investments through the latter half of that period, and post that, which gave me some insight into my own strengths and aspirations of working with early stage entrepreneurs, right? What they say is, if you don't have a good idea of your own, maybe the next best thing is to work with other people's ideas, right? Which is what we're doing. So did a few angel investments, and then partnered along with a good friend of mine and a classmate of mine from business school, Vishesh, who is my partner at Speciale Invest, to start Speciale Invest in 2016 December, right? So we've been around. So that's been my personal journey: technology, product, entrepreneurship, some angel investments, working with entrepreneurs, leading to becoming a fund manager. So I'm not like a run-of-the-mill or standard investor that you would come across maybe, right? I'm also learning the trade as we go along. So that's my background. A little bit about Speciale Invest. We've been around for 3.5 years. We have 11 to 12 companies in our current portfolio doing seed checks. We're based out of Bangalore and Chennai with a small team of analysts supporting Vishesh and myself as founding partners. We invest to the tune of $500,000 in the very early stages of a company, typically, right? We write small checks, checks as small as 100 to 200K, and go up to 500 to 750K also in the very early stages of a company. The sectors that we like to focus on are, we like to think of ourselves as deep tech, frontier tech investors. Two primary themes that come within this gamut of frontier tech, deep tech. One is enterprise B2B SaaS companies doing differentiated tech. Differentiated tech comes under the gamut of AI, machine learning, AR, VR, cloud infrastructure, developer infrastructure, security, digital security, and a bunch of other emerging technologies, right, on the software side of things, right? What is important to us is that at the core of the business should be some differentiated technology that is hard to build, that is non-trivial to build, right? Which means we will not invest in the next ERP, the next CRM, or the next general sales platform, but we will be looking for what is this technology differentiator in these businesses that are getting built, right? Which also means that the background of the founders is quite important, right? And what they have done and what their expertise lies in building these technologies and building these platforms, right? So as I said, 50 to 60% of our portfolio is focused on enterprise SaaS on the software side, right? We also do 30% or so on industrial hardware and tough problems to solve on the hardware side of things. Go from electric vehicles, space technology, medical devices, robotics. These are emerging technology areas that we are super excited about, right? And that we are looking for, smart, hungry entrepreneurs to solve tough problems in these domains, right? These are also areas that we are looking to invest in. We've already made investments in the past, right? Yeah, so that's broadly the investment areas and areas of focus for us. We are happy to invest at a stage when there are no revenues in a company, which means very, very early. There's a team, concept, and an MVP, typically, right? Most of our investments so far have been pre-revenue. Some investments have also been pre-product launch, right? Which means the pedigree, background, and the narrative that the founders set for us is very important. The background of the founders individually, as well as what they bring together as a team to the table, is super important to us to evaluate while we evaluate the opportunity. Have they worked together? Do they gel well together? Why have they come across this particular idea and this particular platform, right? What makes them the best team and differentiated enough to solve this problem better than everybody else? And is the solution, is the problem large enough? And is the solution differentiated enough and much better than what is out there in the market today? Right? These are all factors that go into decision making in terms of what is a good deal, right? What we are consistently looking out for in terms of domain thesis, while we've already spoken about enterprise SaaS, differentiated tech, industrial hardware, differentiated tech as thesis, we personally as a fund at Speciale are continuously looking to global flavors of innovation and not necessarily just Indian level of innovation, right? We are reading, learning, talking to people across the globe, right? We have investment partners and relationships in Israel, right, which is one of the most bleeding edge ecosystems of the world, right? We learn from there. We have ecosystem partners in the West, in the Silicon Valley, right, who we continuously stay in touch with, right? Some of our portfolio companies are building global products, cross-border products, building out of India, but selling to the world, right? And we have ecosystem partners in these global geographies from where we can learn from. And therefore, we are always keeping an eye out for what does innovation mean at the global scale, right? And what is disruption at that level, not necessarily being better than the competition that is there locally in India, but being the best in the world is very, very crucial to us, right? So we are continuously looking at sectors that are 5 years ahead and 10 years ahead, right? As opposed to the sectors that are already ripe today, right? Some of the companies that we've invested in, in terms of space technology, in terms of robotics, in terms of AI for a variety of, SaaS platforms, in terms of cloud infrastructure, in terms of AR, VR, are all global products from day one, right? And that's the flavor that we would like to maintain, right? Of course, we are ourselves personally based in India, and therefore we're looking for founders starting off here. But aspirationally and directionally, we're looking to building global products. And that's what we would like to invest in, right? Yeah, I think I'll take a little pause here because hopefully that will give a flavor, that is given a flavor of what we try to do and what we have done so far, right? Happy to take questions and open the floor up. That makes sense, Nishchay? Or you want me to talk on other things? I'll be happy to.
No, that's pretty much it. I think what I'll do is I'll kickstart a few questions from my side across to you before I act towards the audience questions. Before I do that, I just wanted to quickly tell the audience that, hey guys, I have actually circulated a small link where you can, we are basically moderating the questions being sent across from your end itself. Now, just join in the group, give us a small intro and the question or the query that you have for Arjun. And what we'll do is we'll get you live onto the panel over here and you can ask your question directly itself. Perfect. With that announcement, Arjun, very interesting sectors that you've looked into. Specifically, I was going through Speciale's, portfolio, and space tech came across over there, right? So that area is very, very unique. If you can elaborate more about, how you go about first finding entrepreneurs regarding space tech. That's one. The other aspect is how do you evaluate? I look at it at all of these deals in some manner as a moonshot at some place, right? So how do you evaluate moonshots, right? That could be another question and another direction which I would love to take with you itself.
Yeah, let me take the first one about the space industry itself, right? Obviously, it is it is something that sounds outlandish, is outlandish literally, right? Is a moonshot in many ways, right? And neither me or my partner are rocket scientists, so we're not necessarily domain experts there, right? But it is something, it is a trend and it is a thesis that was built over a period of time, right? This has not come out in a month, 3 months, or 6 months even, right? This is a thesis built over a couple of years, right? If not more, right? And it starts with, again, looking at what I mentioned earlier, looking at global trends and seeing what has happened at the global scale in a particular industry over the last 5 to 10 years, right? And see if India has any advantage and any opportunity to ride on that in that industry and build a differentiation and a niche in that industry, right? So if we all notice that SpaceX, Rocket Labs, and many other companies have evolved in the West over the last decade, right? Elon Musk started this, right? Jeff Bezos is building a rocket. The Virgin guys have built a rocket, right? Many people, satellite companies, Google's, Amazon's, Facebook's of the world are building satellite constellations, right? This wave has been going around, of course, has heightened over the last 2 to 3 years or 4 years maybe, but started 10 years ago, a decade ago in the West, right? That was the first indicator, right? To see there is an interesting ecosystem, there is an interesting reason why this industry is growing and developing, and then you start digging deeper into it, right? One of the primary, and what we learned through that process, one of the primary driving factors is, lower cost of making satellites, right? Right? Satellites have become smaller in size because of miniaturization of electronics, components, so on and so forth, which is innovation that has happened in the last 10 to 20 years, right? With smaller satellites, it's also become faster to make satellites, right? And it has also become cheaper to build satellites, right? And that is been the driving factors of why this industry has boomed over the last many years, right? Okay. What do satellites primarily do? Satellites do primarily two things, right? They do communication, right? For the internet, data, etc., or they do Earth observation, right? They capture images of the Earth and various parts of the Earth, right? And give it as intelligence to whoever wants it, right? Historically, because this was so expensive to do, this was primarily done by only the governments, right, of countries, right? Because NASA would do it, and ISRO would do it, a European Space Agency would do it, right? Because they were the only ones who had infrastructure and budgets allocated to some of these things, right? But as these things became cheaper, faster, better, right? Organizations and private organizations also were able to do this, right? So these were, I would say, tailwinds for us to look at this sector as what is possible, right? And therefore, India can also be a strong player. Adding to this, what we started noticing was that if you look back historically, ISRO has always been a strong player globally as a space organization, right? So India is very well respected in the space ecosystem, right? And that means that there has always been talent, there has been know-how, there has been expertise, right, in India, right, over many, many years in the space technology ecosystem, whether it is building satellites, whether it's building launch vehicles, whether it's building other technologies and subsystems in the space ecosystem, right? What does this mean? This means that there is an opportunity, there is an industry, right? And India has the talent.
Yeah.
What else do you need for an ecosystem to thrive? Right? These ingredients are there. Then what we only need is, the government also to make the right direction, to have the right regulatory framework under which companies can build and thrive, right? Which we also started noticing that, ISRO and the government are saying some very positive things about opening this sector up for private participation, right? Right? These were the things that we researched, and we felt that the time was right for us to look at this sector. And we've been very pleasantly and, surprised and very happy to see that many, many entrepreneurs are building companies in this domain, right? And we've been happy to partner with 2 or 3 of them over the last couple of years, right? But there are more than 20 to 30, if not more. At least I have personally met 20 to 30 entrepreneurs in the space technology ecosystem from India over the last 2 years.
Okay, awesome. So if you met 2030, right? So now the question when I was saying, specifically when it comes down to, I think moonshots are the toughest thing to, evaluate and work towards on. So my question to you is very simple. How do you evaluate like a very early idea stage company, right? And how do you go about doing that itself, right? So it's important to understand as to how do you see a future path. Is it related to your fund's thesis, or is it more of a bottom-up approach for you, where an entrepreneur comes with a unique solution, right, and presents it across to you? How does that functionality work for you? How do you cherry pick something that hey, I'm gonna invest in this company and maybe the follow-on round for this? How does that mental model work for you?
Sure. So of course it starts with just give me one second. Am I audible?
Yeah, you're now audible. We lost
Hello?
you for the last 30 seconds. Arjun? Hello?
Yeah, I'm back. Sorry, I think from the hello.
Yeah, you're bang on. You're back on. Yeah.
Yeah, sorry about that.
No issues.
Just give me 1 second. Let me see if there's a better. Hello?
Hi. Yeah.
Yeah, sorry about that. Yeah.
Please go ahead. Arjun, I think the internet's still a little unstable on your end.
It starts with okay.
Your voice was shuttering in and very robotic.
Let's try this again. Otherwise, I'll put off my screen maybe for better bandwidth.
Oh yeah, sure, no problems. Just
okay.
And now it's perfect. Now it's perfect right now.
Okay, cool. Yeah, so I was saying, pretty much starts with the story that the founder is telling you, right? In terms of founder's background, right? How they've arrived at this problem statement, what research have they done, right? What is their understanding of what is the opportunity here? Why are they trying to solve this particular problem, right? Where have they arrived at this problem from? Is it personal pain? Is it personal experience? Is it looking at certain market? Is it looking at competitive landscape? And what is that unique insight that they are bringing in, right? To say this is a tough problem. This is a unique way of solving this using this technology platform. And I have expertise and experience in building this technology platform in a better way than anybody else, right? So the early conversation with the founders is crucial, right? We try to, of course, validate all of this through our own continuous research and analysis that goes on. We have a small team of analysts that is continuously working and analyzing many sectors, many technology trends. We're always trying to look at technology trends, say, what has happened over the last 20 years, what is happening today, and it's exciting, right? What this
Arjun, I think your internet connection is off a little bit. So my suggestion would be if we can maybe like check out on the video and for better bandwidth itself. I think if we can just go to audio, that'll be fine.
sharing with us.
Arjun?
Hello?
Yeah, you're audible now, Arjun.
Yeah, sorry about that.
No issues. I think the internet's a problem. I think we should complain across to Geo, not you.
Yeah.
Anyways,
so,
yeah.
Yeah, I think understanding the continuum of where this technology track and trajectory is very important, right?
Understood.
For example, AI, right? Now, AI, to be honest, has been spoken about for 10 years, 15 years in various forms and shapes, right? But only in the last few years has AI actually been implementable in very specific use cases, right? And that is because of very specific trends that are happening on the chip side, on the on the training side, on the machine learning model side, and so on and so forth.
Of course.
Start saying, okay, this is now possible, right? This is the right time because data is available, because computation power is available, because the use case is there. So that's an example of how you say, okay, this opportunity is, the time is right for this opportunity. The time has got to be right and the founders got to be right. I think these are the primary evaluation criteria. Of course, that is from a technology and the product perspective. From a team perspective, it's very important for the team to be gelling well and having history and background together for us, because we strongly believe and understand, given our own personal experiences, that this is a very long journey that the founders are getting onto together, right? Not an easy journey, right? And therefore, co-founders matter, partnerships matter, relationships matter for the long haul, right? And that's how we also make the decision, because we're going to become partners with these entrepreneurs over a longer period of time.
Of course, obviously. So I have one question from Dheeraj, who's going to be coming online, Arjun. He has something pertaining to EV that he's going to be asking you about.
Sure.
Dheeraj, you've been allowed to talk. Unmute yourself and ask your question to Arjun directly over here.
Hi Arjun. This is Dheeraj. I'm co-founder of Chazo. At Chazo, we are building a highly scalable and dense network of EV charging stations. So currently, there are just 250 electric vehicle charging stations in India, and India is going to need more than 1 million charging stations to support 15 million electric vehicles, which are going to be on road by 2023. So the reason is, there is a chicken and egg problem which is happening because of lack of electric vehicles on the road. EV charging stations are not getting adopted, and there is a weight game which is happening now. So to solve this thing, we are bringing a very low cost, affordable, compact IoT solution called Kirana Chazo. And it's just 10,000 rupees charging station. And with Kirana Chazo, we are bringing millions of small Kirana stores, households, small businesses into the EV charging infrastructure hold. And we are providing supplemental income for them. So my question is that, currently, like you said, your focus area is also into EVs. I just want to understand whether you're also keenly looking at the EV infrastructure space as well.
Rita, thanks for your question. Right, I think interesting problem that you're solving. Obviously, it's one of the needs, right, or one of the emerging needs in this ecosystem going forward, particularly, right? You're right that there is a chicken and egg problem of number of vehicles today. EVs on the road is less, and therefore the need for charging system is also less. But I think it's a matter of time as vehicles grow, as OEMs start making more and more vehicles, and consumers adopt it, right? That the need will be higher, right? Coming particularly to our interest, yes, we have done some EV investments in the past, right? Particularly vehicles and some things in the charging ecosystem. So we have a close eye on that, right? And we will be looking at emerging solutions, right? We will be looking at what is the differentiation, what is the technology platform that any EV charging ecosystem is building, right? And we are happy to take a look and learn more, right? And invest in this ecosystem.
That would be great. Also, I have another question, Arjun. So I just want to understand how is this COVID situation going to impact the early stage investing? Like what sectors are going to be more interesting for investors now, and what sectors are going to take backseat for the moment?
Sure. I think this is relevant probably to all participants listening, right? It's interesting times, right? For entrepreneurs, obviously, but even for investors, right? One has to relook thesis, right? And revisit what we already know about the world, because the world is changing, right?
Yeah.
And while a lot of things could come back to normal once there is, let's say, a vaccine, once there is a solution, and once things are a little more back to normal, a bunch of things will not be coming back to normal, right? A lot of things will change in terms of consumer behavior, in terms of business behavior as well, right?
Yeah.
The trends that are obvious, that are taking, getting a lot of attention right now is online education, obviously, because people are, quarantined at their homes. Kids need everybody needs to learn, continue to learn, and you can't go to institutions, schools, colleges, so on and so forth right now. And maybe this is the time when online education will definitely kick on, right? So anything to do with online education and how that, that can help students is going to be immense, right? Healthcare obviously comes back into the focus. It was always in focus, but maybe there is an extra level of urgency in healthcare and healthcare delivery, right? Again, given the remote nature of what what we are living in, right? Healthcare delivery remotely and online is probably a domain that needs to be looked at. We are all currently using Zoom for this call. Zoom and any collaborative platform, right? For communication, for collaboration, for development, right? For work is in general are great platforms to build on, right? We are also noticing obviously this as a time for more OTT platforms, because we are probably at home spending more time online, right? Watching programs, right? Netflix, Hotstar, right? Amazon Prime, OTT platforms are going to be interesting. Gaming is going to be a very interesting theme, right?
Yeah.
Online gaming, right, is going to be very interesting. So these are all seem like primary sectors that are super exciting right now, right? And therefore, what one has to start thinking about to enable these industries and these platforms, what associated and affiliated products and technologies will get built, right? So
Got it.
contributing to this is also going to be super exciting.
Got it.
Some of the things that I can think of currently. I'm sure there are a dozen others, right? But time will only tell, and we'll also need to do a lot more research.
Yes, yes. So one more question from my end, Arjun. So,
Dheeraj,
I mean,
I'm sorry. I mean, this is your third question. There are a bunch of people who want to
uh,
ask questions across.
cool, cool. Fine.
Because you're in the group, Arjun will be joining us in the group also, so you can do the follow-up questions with him over there itself.
Sure, sure. Definitely.
Perfect.
Thanks for
Thank you
letting me
so much.
know. Yeah.
Thank you so much.
Thanks, Dheeraj.
Thank you.
Okay, Arjun, I have another query from Nishant Ranjan, who I'll be getting on right now. Nishant, you're online now. Just unmute yourself, give us an intro, and ask your question, please.
Hi, Arjun. This is Nishant from Zero Auto. Great to see you online today. Just wanted to understand from you. I understand that there are, we are into electric vehicle battery space, and we're kind of optimizing batteries for OEMs. What I wanted to understand was that we see business models such as swapping, and I also see business models such as technology licensing, and of course the play around either going directly to clients or going to OEMs with the entire battery pack. Are there other exciting business models that you see around battery technology and around electric vehicles?
A very interesting question, and it is something that a lot of the industry is still trying to understand and grapple with, right? Because there are no standards today, right? Because there are a few options and a few different paths that different players are taking, and given the still nascent stage of adoption, right? I think the jury is still out, right? One has to look at both forms of, or at least on the battery side, there is a swapping and then there's a charging, right? These are two primary options, right? Of how a vehicle will get charged, right? And both have their pros and cons, right? In one, it is about, management of the battery, understanding the health of the battery throughout. In the other, it is about time to charge, right? And convenience to the end customer, right? I think time will tell which model picks up, right? And whether it will be the only one model or whether there'll be hybrid model also, right? This is about the battery itself and the technology itself, right? And then the convenience. The second part, which probably you're asking, is around the business model in terms of, how will end consumers end up paying for this, right? Because while the cost of, batteries is coming down drastically, still at a certain premium, which is why there is an adoption lag in this industry, right? And one of the things is to say, how can you ease the burden of the price, right? Going to the end customer in terms of battery ownership, right? In terms of vehicle ownership at the end point, right? And the battery ownership being a part of it, right? We have seen business models or ideas, at least in the business model space, not validated yet, of course, right? Which say leasing of batteries will happen very, very regularly. Vehicles will be owned, batteries will not be owned. The entire vehicle will not be owned, the vehicle will be leased, right? One will have shared battery mechanisms, right? One will have shared charging mechanisms, right? Who pays for which aspect again, is kind of a power balance equation in terms of what is the nature of the partnership. Will the OEMs give you access to the vehicle network? Will the OEMs give you access to a dealership network and you bring in only the technology? Then it's a technology licensing, right? If you also bring in infrastructure, if you also bring in locations, and if you also bring in operations, then the entrepreneur probably has the leverage to play a full stack game, right? And charge, whoever is partnering with them on various stacks, right? I think this is a very nuanced and a deep question, right? I think there are 3 or 4 models with a bunch of mixed solutions that will start off with. And I think over a period of time, if there is any standardization, right, maybe 1 or 2 models will catch flavor, right? We have to also draw parallels as to what has happened in the general IC engine space historically. Maybe some similarities will happen and some differences will happen, right? In the IC engine space, there are large auto manufacturers, but there's also a large ecosystem of, component manufacturers, right? Is battery a component or is battery an integral, right, core chassis engine with the OEM will make themselves, right? These are all questions, to be honest, I don't have answers to, right? I think the next few years and what maybe some of the large players take actions on and how the government also moves will hopefully help in answering some of these questions. But I'm excited about probably battery swapping personally, battery not being completely owned by the end customer, but being on a shared basis or on a lease basis and pay as you go sort of a model. That is one model that I'm super excited about because I think that reduces the burden on the end customer of owning this, high value asset on day one and buying this.
Understood.
Hope that at least touches upon some of the aspects, right? As I said, nuanced and detailed conversation. Happy to take it offline.
Sure. Thanks for your response. We'll take it offline. Thanks.
Great, Nishant. All the best.
Arjun, I have another question from Ashutosh, who is specifically asking you certain things about your thesis, in fact. So Ashutosh, you're online now. You can unmute yourself and ask your question. Introduce yourself and ask.
Hi, my name is Ashutosh Buddhiraju. So we're the founder of Rath. So Rath, what we're trying to do is help small businesses, neighborhood businesses go online with their smartphone by creating intelligent, structured and integrable digital ledgers. Something that could be integrated with other third-party enterprise software. So that from their smartphone, they can get the benefits of the tech ecosystem. It's not single standalone applications that they'll be using. So that's what we're building as a SaaS-enabled marketplace. So, this opportunity that we see is kind of connecting the dots and that, would be needed to be communicated to the investor. So my question was, is the thesis, you must have general principles on how the market is going to pan out. So, how much do you factor that into your account and how much is the, entrepreneur's view or vision that he brings on board? So this is my question. Thank you.
Yeah, Ashutosh, thank you for your question. See, obviously there are, sectors that we have done research on and spent time on where we may have, let's call it a strong thesis as opposed to just a basic understanding. And if that is the case, there will be a strong bias or a view to say that certain things work much better, right, than certain others in terms of technology as well as the business model, right? Having said that, we are always of the opinion that a good entrepreneur, right, who has depth of understanding of his space and his domain and spend time researching it, spend time finding unique insights, will have much better insights than us about any sector, right? And we are always open to learning and reevaluating our core thesis on a particular domain, right? So while we will come with some understanding of a domain and an opportunity in a sector, we are open and always willing to listen to entrepreneurs, right, to say what their view is on that and if possible, if they're able to change our mind about certain biases that we may carry, we will be more than happy to do that. And that comes from the depth that the entrepreneur brings to the table in his narrative, in his pitching, in his understanding of the market, and convinces us and shares that excitement with us. Does that answer your question? Is that?
Yes, it does.
Right?
Thank you.
So the entrepreneur is very, very important, right? We come with background understanding, but we're happy to change our mind if that is what the entrepreneur helps us do.
Okay. Perfect, Arjun. Thank you for answering that. Arjun, just a follow-up, right? So are you saying that you don't look at it from a sectoral, I mean, you have a sectoral preference, but you're looking at it from a more of a bottom-up approach where the entrepreneur actually tells you, rather than I mean, the other way around, where if a particular entrepreneur works in a particular segment or a sector, you most likely will invest or you won't invest. I mean, that's a separate matter altogether. But I think your investment comes from a bottom-up approach. I'm assuming that's the.
So that's very well put. I think I would agree with that, right?
Yeah.
Because unless we are open-minded and keep listening to every single entrepreneur that we come across, and we see 2 to 3 entrepreneurs a day, on an average, we see about 100 deals a month, right?
Yeah.
As a team, right? So we see a lot, or reasonable amount at least. And it is always important to be respectful and open to, where every idea is coming from. And you never know where the next disruptive idea is going to come from. And if I'm only looking top down and from a very specific sector focused perspective, that this is what I've done research on, this is what I've spent time on, this is what I will invest in, then probably I will miss out on so many things that could be super exciting for the future.
Of
right?
course.
Obviously, there are certain constructs that we as a fund will probably avoid doing. That comes from, let's say, for example, standard B2C businesses that, because they need a lot more capital to scale, to build that, to do advertising, to build scale and branding and customer acquisition, right? Given that we are a small fund and an early fund and we are focused on deep technology, that we will park aside. But beyond that, we're always looking to the entrepreneur to teach us something new, right? And it was also the case, for example, we spoke about earlier in the space technology domain, we've done a deal in the robotics space, right? Where a couple of entrepreneurs came to us and told us a very, very unique insight into what they were doing, right? Into the industry that we had done reasonable research on, but hadn't found something super exciting. But when we spoke to this set of entrepreneurs, right, they threw a very different light on the problem and the solution. And that got our mind thinking, right? Saying, wow, why isn't anybody, or why aren't too many people thinking of solving this problem in this way? And what if this approach to solving this problem works? How big can this opportunity be? And of course, you then go back and validate a few more things of what the entrepreneur tells you. But that's an example of suddenly coming across something that we did not know of, right? And that serendipity is very, very important, I believe, for us to find entrepreneurs.
Of course. Arjun, thank you so much for answering my query also over there from our fund.
Happy to.
We also have Amrita, who's joined us over here and has I think she's not online anymore. So what I'll do is I'll go on to the next question. That is by Anurag. Anurag, you're online now. You can unmute yourself and ask your question. Anurag?
Hello.
And ask your question, please.
Hello.
Yes, you are audible.
Am I audible?
Yes.
Hi, Arjun. Hi. Hi, Arjun. Yeah, this is Anurag. I am the founder of a health tech company, FitMeMax, wherein we are a AR and a VR based health tech company. We are also delivering product as well, like a e-commerce platform for product as well. We have a good R&D team with researchers on diabetes and thyroid related products, health supplements. So we have also generated like 1 lakh plus revenue, and we have generated the MVP. We have 20 plus premium clients on the beta version. So all I want to ask you that, is this stage fund ready, or do I need to wait? It's a general question for all entrepreneurs as well. So this is my first question actually.
Sure, Anurag. one thing, we already spoke about. Healthcare is a domain that is hot right now, or
Yeah.
is important right now. Healthcare delivery, maybe using AR, VR is a very important thing because remote delivery is very important. So seems like have, ingredients which are timing ready, right? So that's a positive, right?
Okay.
You need to have early users and adopters, right?
Okay.
So that is also a positive sign. I would say this is not a bad time to start talking to investors, right?
Oh.
I think there are a variety of investors. There is no one answer. We are open to investing super early at an idea stage, at a concept stage, at an MVP stage, at an alpha stage that you're talking about. Some other investors might want to see a little more traction of customers, revenue, right? It's slightly later stage. But most important thing for you is to validate what is your core hypothesis and validate your core hypothesis with your customer segment that you're going after.
Okay. Okay.
Able to do that, and if you're able to show in the first few months that in a particular segment or a couple of segments, your solution, your product is used and repeatedly getting used by your end customers, that's a good sign, right? Either you are using it or you are getting some proxy that they will use it and they will pay for it.
Okay.
Right? If these signs and signals are available to you, that is a good narrative and that's a conviction that investor can get on top of, right? And probably invest. Right?
Okay.
Multiple components, but that's one of the core components I would look at.
Okay. Okay. Thank you, Arjun. Thank you. My second question is like when you, this is also a general question for all the entrepreneurs. Like when you invest in a startup, so is there any like a thing like the founder has to have a background from IIT, IIM, or something like he has to do a he has to be a graduate or something like that? Can he be suppose he's a dropout, right? Suppose he has he's like after 12th he has moved into another sector, but kind of launched his product on that same sector wherein he's interested in. So are the investors like they get impressed by this, or they need some core strong education background as well?
A simple answer is that there is no such, template requirement, right? Where you should have studied what your basic qualification should be. Of course, what we are looking for is the problem that you're solving, the technology and the product that you're building. What makes you the right person to do that, right? Doing that, if in whatever.
Arjun, I think your audio has also.
That you are. Hello?
Arjun, yeah, we lost the last 30 seconds of your audio. That's about it.
Okay, sorry. Right, so I'll repeat that, right? So, yeah, so I'm saying, let's say you are a college dropout or a school dropout, but for the last 5 to 10 years, right, you've been coding, you've been building stuff, right? And you are big and you built and shown that you can build stuff, right? And something very similar, and you know what you're doing, right?
Yeah.
And that is good enough, and that should be good enough, right? It does not matter whether you went to IIT or some other, brand name institute, so to speak. The answer is no. What needs to be shown is why are you the best person to solve this particular problem that you're solving, and this is the problem you're solving.
Okay. Okay. Thank you, Arjun. Thank you. Yeah.
All the best, Anurag.
Thanks a lot. Yeah.
Okay, Arjun, we have another question from Ishan Rikhi. Ishan Rikhi, you're online. You can ask your question directly to Arjun.
Hi.
Self-introduce and maybe ask a question.
Am I audible?
Yes, you're audible, Ishan.
Yes.
Hi, Arjun. My name is Ishan. I am the founder of Kasabia. And I just want to ask you something. So basically, the first thing that I want to ask is that as you say that you are the first investors typically in every startup that you invest in, how much equity do you guys take in return, and how do you guys work on that one?
Fair enough. So, hey, Ishan, we are typically the first institutional investor in a company, right? Which is just to clarify that, right? You may have raised some money or friends and family money, so to speak, right? First institutional check comes from us is what we prefer. From an equity perspective, this is a wide range, right? There again is no prescribed single number, right? The range can go as low as 5 to 10% to as high as 20%, 25%, right? In the early stage of the company. It is contingent on the risk that we take, the capital that we put in, and what we believe, right, is fair for that particular industry and for that entrepreneur and that idea, right? So I would say between 10 to 30% is the range that an early investor, most early investors would like to, would be the equity that an investor would like to own in a company at the early seed stage, right? Then 10% start becoming too less for the investor. Obviously more than 25, 30% is too tough for the entrepreneur, right? And that's how the range is bound.
Absolutely. Another question that that does. I have another question, which is basically, so I'm a single founder, and that's one question, that how do you guys look at companies that only have single founders, and how much weightage does it go? Is it only to the pitch, to the personal meeting? Is it traction that the company shows, the core competency, or the end product and the vision? So do you have a weightage or something like that? That's the second question.
Okay, and the first one is about the solo founder thing, right? We are strong believers, and we spoke about this earlier, that starting a company and building a company is a long journey, is a hard journey. I think it's always best to have partners, right? Of course, it's not, there are enough examples out there, right, of solo founders being super successful. So it's not a blanket rule, but we prefer if there is a founding team as opposed to a single founder, right? We always urge, right? We have done single founder investments in the past, but we've also seen higher degree of success when there is a strong team of 2 to 3 members coming together, right? Because complementary skills, as well as on tough days, it's always good to have a partner that you can,
absolutely
rely on for support and for guidance, right? That's the way we look at it. So never say never, but there is a, there's a thinking to say that always better to have 2 than single, right? So that's the solo founder side, solo co-founder side. In terms of weightage, traction for us is not, for us particularly, is not is not as important. Team is super, super important. Probably the highest weightage goes to the team and the capabilities of the team of what they're building. Second, I would say is, the tech and the innovation in the tech and the product that they're building, right, would be a strong thing. Obviously, market is an important attribute. I would say team, tech, product / market get, in some sense, the top 3 weightages, right? I don't want to put specific numbers.
Understand.
Things that matter, right? Because a bunch of nuanced things, and therefore more and more conversations with founders is very important. We are not investors who invest in 2 meetings or 3 meetings. Once we get excited about something, we like to spend time with the entrepreneurs. As mentioned previously, even the investor-entrepreneur partnership is a long partnership, right? Which means getting to know each other is very important for us. So we do try and spend as much time as possible over a few months, 2 to 3 months, right? Multiple meetings is something that gives us confidence and helps us build conviction on particular investment.
Understand. Thank you so much. It was wonderful talking to you. You answered both.
All the best, Ishan. Nice talking to you.
Great talking to you. Thank you.
Arjun, we're going to take the last 3 questions. Okay.
Sure.
And then we're going to end the whole session itself also. We have Ashutosh Shrivastava. So now we basically answered to Ashutosh's question. Yeah. Ashutosh, you're online now. You can unmute yourself and ask your question to Arjun. Introduce yourself and please, ask your question. Ashutosh?
Hello?
Yeah, you're audible.
Hi Arjun, how are you? This is Ashutosh Shrivastava. I am a founder of a company called Medivenue. We are into healthcare services. Can you hear me?
Yes, Ashutosh, you're audible. Please go ahead.
Perfect, because I saw Ishan Rikhi on the screen, so I thought something went wrong. All right.
Go ahead.
So we are into transnational medical teleconsultation services. Basically, we help people in Nigeria consult with specialist doctors in India through teleconsultation. That's the business model, through setting up teleconsultation centers. Now, this is a business of export of healthcare services from India to other parts, third world countries, as you may want to call it. So one thing, how do you see this as an opportunity, or for the investor community, or the investor sentiment around such opportunities? And as for your company, Special Invest, how do you look at this?
Hey Ashutosh, thank you for your question. Right, definitely, I think telecommute for medicine, telemedicine is a strong trend, right? So has been a strong trend over the last few years, but probably will accelerate now, right? And therefore, my general opinion from broader investor community is that there'll be a strong interest, right? Mm-hmm. There should be strong interest given the economics work out and the breadth of what you offer services and to what countries that you offer and what other regulatory frameworks also that you have to grapple, right? As an overarching trend, I think telemedicine is valuable and can have strong, investor interest, right? Particularly for us, pure just telemedicine may not be exciting, but we would like to understand if there is a deeper technology innovation quotient in what you're doing, right? As opposed to a remote nature of providing a service, right? Do you bring in certain innovation in how you are doing this? Is there any data capture? Is there any other tech innovation platform itself?
Yes.
Thing that we would be curious to learn, basis which we would make a decision.
Sure. So there is a thought around it, and we'll share it at the appropriate time. We are working with Favcy on that. So thank you.
I think Nishant and Piyush will share with you, my contacts or our fund contacts. Happy you can share details and we can coordinate.
Absolutely. Absolutely. Thank you so much.
Arjun, so there are a few questions around how can they pitch across to you. I think if they can hear from you directly itself as to how they can reach out to you with their pitch decks and everything, that'll be great. Instead of us sending a message. So, just help everyone out, for everyone over here, that
sure.
What is the best way to reach out to you, Arjun?
Sure. You can email me directly, arjun.rao@specialeinvest.com. Right. We'll be circulating the email ID later also. You can also send it and that will be directly coming to me and I'll respond. No question. You can also send out an email to a generic email on our website, info@specialeinvest.com, and somebody from our team will definitely respond. I think we make sure we respond to every single email and pitch that comes into us, right? So those are direct things. You can reach me on LinkedIn. You can find me on Twitter. I'm reasonably active, right? Me anywhere. Happy to sync up.
So you can reach out to Arjun from different avenues. You can reach out to him over his email, Twitter, LinkedIn, across. So all the avenues are open. They take all the deals which come to them very seriously. So guys, write in across to Arjun if you want to get in touch. Arjun.rao@specialeinvest.com is his email ID. Okay. So I have Prrashanth Nagaraj. Prrashanth, you're online.
Yes.
Now?
Can you hear me?
Yes, we can.
Awesome. Thanks. Hey, Arjun. This is Prrashanth. I am the co-founder of Feedfluent.ai. So we are a customer experience management specifically into feedback collection and analysis via speech analytics. So we are trying to solve the problem wherein the feedback is pretty much dominated by survey format, and therefore the success rate or the response rate is too low. Companies have been struggling in terms of understanding what exactly is working well, because most of the respondents who are responding are pretty much giving negative feedback and unhappy customers who are responding. So we are bringing in speech analytics to actually solve this problem, and I will share in detail on the pitch deck. my question to you was in twofold. I see that you already have a voice AI company, Wingman, on your portfolio. So is this something that you think you people would be interested, especially considering the COVID situation right now? And second, when you guys invest in the initial phase, what is the typical valuation you look at? Because valuation according to us is completely hypothetical. We come out with numbers, we justify how much we are going to do as far as revenue is concerned and stuff like that. So it's completely hypothetical, and given the current scenario where the next 1 year is not completely clear as to how it's going to proceed. So what are your thoughts on this?
Yeah, I think first question about your particular idea and your particular domain of what you're working on, right? Again, we are tech first investors. We've done a voice AI company, but they are particularly in the sales domain, right? Wingman we spoke about, right? We are happy to look at any other innovations that are happening in your case in surveys and feedbacks, right? In the segment, if the tech is great, right? Happy to take a look, happy to learn more and evaluate, right? For an investment, right? Domains can be different, technologies can be different. Obviously, we'll not do something exactly similar to Wingman again, right? That does not make sense. But the technology being similar, but having a different use case and a different market to cater to is more than welcome for us, right? Hope that answers your question, Prrashanth.
Yes, it does.
Second question about valuation. I think we spoke a little while ago about what equity investors like to take and we like to take. As I mentioned, that number can go from single digit 10% to 25-30%. So for the money that you get and the percentage equity that you give out, that's the valuation range that you can gauge.
Okay.
Right? There is no given answers, right? You're right. It's a broad range. It is more subjective at the early stages because there are no revenues or very low revenues, right? This is not necessarily a pure science, right? It is something that the early investor and the entrepreneur agree to and are happy with. You need capital to get to the next level. The investor needs certain level of equity for the risk appetite, for the risk that they're taking at the early stage, right?
Definitely.
And
Yes.
the valuation, therefore, is a range of variety of factors, right? Take that number of equity dilution between 10 to 30% is the range for valuation as well, right? And let's assume, the number of the funding is anywhere between, $250,000 to $1 million.
I get it. Is it necessary that we come out with a valuation certificate from a merchant banker kind of a systematic approach, or are you going to be okay to start conversing with?
No, I think those are technicalities that happened at the latter stage of a deal closure. Right?
Okay. Yeah, I get that. Thank you.
Thanks, Prrashanth.
Thanks very much, Arjun.
Perfect. Last question, which we're going to take today.
Okay, I'll put myself back on video for the last question at least.
Okay.
Changed my location for better internet at home.
Okay, perfect. So the last question comes from Ashish Nanda. Ashish Nanda ji, you're online. Please unmute yourself and you can ask your question. Hello?
Hello.
Yes.
Can you hear me?
Yeah.
Yeah, Mr. Arjun, hi. This is Ashish Nanda. I'm the co-founder of Zoifin, which is a SaaS platform which enables any person to set up his own tiffin service under 1 minute. We supply the food from our own kitchens, but the reseller brings in the demand. So what do you think of this social commerce model in food tech and SaaS market? Hello.
I think, hey, Ashish, good to connect. I think we've seen over the last 12 months, right, cloud kitchens and public kitchens being reasonably strong flavors, right, in the food tech space, right? And we also notice going forward that probably given the COVID situation and the virus and everything, maybe restaurants will also struggle from a walk-in perspective. because of social distancing and norms around that, right? So there'll be lesser people maybe willing to walk into a restaurant than before, right? It does not go to zero, obviously, right? But it does reduce, right? And if you're not able to provide all the measures that make people comfortable to walk into a restaurant, then ordering in at home, right? From either direct restaurants or via central kitchens is going to be more and more attractive to the end consumer. With that narrative in mind, I would think that this should be attractive. I would also put in, the factor to say one has to look at the economics of this business and the competitive landscape, because it seems that over the last couple of years, there have been a lot of people playing in this market. So one needs to be very clear about the unit economics that you're going to play with, right? Are you generating?
See, what is the differentiating factor that we are bringing into the scene is that while there are a lot of players who have come into this cloud kitchen concept, but we are bringing in this social commerce aspect into it, whereby we are appointing resellers. We are kind of outsourcing the demand and controlling the supply from our side. We are not aggregators that for that matter. So how do you see this business model?
To be honest, it'll need some thought from my side, right? I think customer acquisition, right, can be done in various ways. You are doing customer acquisition in a unique fashion. Instead of going out and acquiring your own customers, you're working with partners and resellers, like you say, to acquire customers, right? That does not necessarily mean that your customer acquisition cost goes to zero. That only means that your customer acquisition cost is not a B2C advertising, branding, marketing driven customer acquisition cost, correct? But you will also have to pay your reseller partners a fee for getting these customers, right? Which will impact your bottom line and your revenue stream, right? So one has to look, I mentioned that one has to look with this new model, right? What is the nature of demand and the scale of demand that you can generate, right? And what economics play out at early stage and at certain scale if this plays out, right? Who does delivery? How much do you pay the guy who gets demand, right? How much do you pay them upfront, right? And how much do you pay them on demand generation, right? And then what is your capex cost, right, for your kitchen itself, and does that get covered over a period of time, right? So one has to do a modeling of the unit economics itself, right? You were bringing in a newer form of customer acquisition. That's the change in the model, right? Right. Current models are very high customer acquisition cost because of high competition, right? But even your resellers have to bring customers from some common platform, right? Because the customer is me. I am being bombarded by Zomato, by Swiggy, other cloud kitchens, so on and so forth, right? To buy from a restaurant or from a cloud kitchen, right? Now I will also be, bombarded or be, called upon by another channel, which is a reseller or a partner, right? Who will look to get you demand, right? The demand population is not different, right? For you, the demand source is different, right? The demand population is still the same. You are not bringing in new demand. Keep that in mind when you are calculating your cost of acquisition and then what you have to pay your demand aggregator, right? Right. So please do that. That's the right way to do that. I'm not necessarily an expert, right? But that's the way I would look at it. See, it's a different customer acquisition channel and needs to be thought of in terms of what's the cost of this channel and therefore what is the cost to service it. Okay.
Perfect.
Yeah.
Thank you. I hope the question's been answered. Thank you. Okay. So before we end, I would like to thank Arjun. Arjun, thank you for taking time out today. I'm feeling so many questions. It's been a pleasure.
Absolutely, my pleasure. Right. Thank you, everyone. Thanks for setting it up, Nishchay, and thank you, everyone, for the questions. I know not all these questions can be answered on the fly, right? And may not be satisfactory, but hope to stay in touch and, can take some of the conversations offline also.
Perfect. Okay, before we leave, I just wanted to thank all our partners that have enabled us to host a successful series of events over here. So I would like to thank Amazon, AWS, Circle Work, Head Start, Masterlife, Startup News FY, Network Capital, Venture Catalyst, Startcom, Echai, and also that we've tied up recently with. So it's been a pleasure having all of the partners coming on board. Arjun, thank you again so much for coming on a Friday morning itself and spending some valuable time with us and the entrepreneurs that have come and asked the question today. Thank you so much.